Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, it's Friday. We made it to the end of the week. What's going on in the markets today? Dow's up about 150, NASDAQ up 250. We're having this big update. Now, this is interesting to me. This market really is, it's kind of exciting to me, you know? This is a market that there's no pullbacks, right? There's no corrections, and everybody will tell you we're not in a bear market anymore. We're in a bull market. We're going straight up. Now, if you noticed, the Dow Jones Industrial Average had 13 straight up days. That streak ended yesterday. 13 days in a row that the market went up. Now, when's the last time that happened? When is the last time we went up 13 days in a row? You'd have to go back to 1987. Now, that's interesting. Now, for you young people, you probably don't know how the 1987 year ended. It ended with a crash. It was a thing called Black Monday. Black Monday happened in 1987. And you'd have to go back that far to find 13 up days. But later in the year, in October, Black Monday came and sent the market crashing down. Now, do I expect a crash? Eventually, I do. Will it happen this year? It's possible. Wouldn't shock me. But I do think the market's going to come back in. We'll see how that plays out. Maybe you got to take that. This is the new bull market, and we do nothing but going up because AI, Mike, we got AI. It's going to save the market. It's going to save the world. That's great. All right, let's get over to the real estate end of things. All right, so now Zillow, sometimes they come out with just funny articles, right? Here's one. Okay, student loan borrowers had 3.5 years without making any payments, right? Yet many still can't break in to this housing market. Now, why in the world would anyone in their right mind want to break into the current housing market? I don't know. I don't know why they would want to be in this housing market. Look, rates have over doubled in the last 3 years. Over doubled, right? Well, have prices done in the last 3 years? Up over 40%, I'd say we went up. Okay, so why does anybody want to break into this market? We're at close to record highs and record high interest rates. Something's going to give. Now, my take is that the prices are going to give. They're going to come down by 40 or 50%. Now, I know, not in your area. Your area only goes up. And I get that. You live in a great area, and that's perfectly fine. But okay, so the student loan people didn't make payments for 3.5 years, but yet they couldn't save enough money to break into the housing market. That's what Zillow said. Now, it's kind of funny to me. Let's think about this. Let's say you have $100,000 in student loans. Hey, you can't pay those off. Let's give you a $700,000 mortgage. See if you can pay that off. That's a really good idea, right? But what do people do with their money in those 3.5 years? Well, a lot of people, they weren't making any payments on their student loans. Hey, I got $100,000 I'm not making payments on. Why don't I go out and buy a new car? A new car is always nice to have. I can make payments on that. So they extended more payments, right? They didn't pay down their student loans. They got a 3.5-year moratorium. So they didn't save the money to buy a house. Now, I don't think anyone needs to break into this housing market. I really don't. Now, it's Friday, and I don't know. I wasn't going to talk about this, but I got to talk about this because it's on my mind, right? Now, a lot of you people that get a little afraid, this may not be the right show for you. All right. So what we got going on now is we got this smoke and mirrors thing going on. Well, first, let's start with the good news. Let's start with the good news before we get to the smoke and mirrors. All right. There's a lot of good news out there right now. There's not going to be a recession, right? That's been canceled. We've got a soft landing. The Fed, they're geniuses. That Jerome Powell, he's a genius. He's got us coming down for a nice soft landing. Inflation, it's gone. It's over. It's done. Look at unemployment numbers, right? They're at record lows. And the GDP numbers just came out. The economy is booming. It's booming, right? Corporate profits are way up. And if you look at the stock market, it's almost at a record high. Oh, we got good news out there. A lot of people, that's their mind frame. And if that's you, you might not want to listen to the second half of this episode. Look, that's what the mainstream media is telling you. That's what they would like you to believe. Now, my question for you is, we're in such good times. We got all these good times going on, right? So why do we have so much deficit spending? Now, deficit spending just means that we're spending a lot more money than we have, right? We're spending more money than we have, and we're doing this about $3 or $4 trillion a year. Now, what funds the deficit spending? Well, the debt. The debt funds the spending, right? And we got $33 trillion in debt right now. So if times are so good, how come we have all this deficit spending? Why not, with all these good times, why don't we just cut back and not spend money we don't have and see what happens? Well, they know what would happen. The whole thing would come crashing down. It'd come crashing down. Do you realize right now we spend $1 trillion that we do not have every 3 to 4 months? $1 trillion being spent every 3 to 4 months, money that we don't have, increasing our debt limits. Now, people are going to get freaked out because this is actually going to happen. We're going to get to a point where we're spending $1 trillion every month. $1 trillion, $1 trillion, $1 trillion, $1 trillion every month. And it's not going to stop there. It's got to get bigger because we got to continue the facade, continue with the smoke and beers, continue with the debt bubble. Now, the debt bubble, we're at $33 trillion. Now think about this. All right. Now I'm just going to use rough numbers, but if you put $33 trillion, which is what we got right now, and you got to pay the interest on this $33 trillion in debt. Well, if you did it at today's rates, that'd be about $1.8 trillion. Now, granted, it's down about $1 trillion right now because some of it's still financed at the old rates of the 3% to 2%. But if you did it at market rates right now, which it's going to happen, because all these things are rolling over. So pretty soon we have to do it at market rates, which would be about $1.8 trillion. Now, how much do we bring in tax receipts a year? Well, you know what else is really fascinating me? Tax receipts are dropping. They're not going up. We used to bring in over $4 trillion a year. Now we're under $4 trillion a year. So that $1.8 trillion that it would take to pay just the interest on our debt takes about half the money they collect in taxes. So half of every tax dollar, 50 cents of every tax dollar, is going to be going to pay the debt. It's going to be going to pay debt service, right? And 33 trillion, that's nothing. We'll be at 40 trillion in no time, maybe 50 trillion if we really get it going. I mean, it's just amazing to me. But if we're in such good times, why are tax receipts going down? Why are they going down? It doesn't make sense to me, right? Well, maybe, that's what happens in a recession. Maybe we are in a recession. I don't know. They say we're not, but it feels like we are. To me, it feels like we are, right? And now the Federal Reserve, they came out this week and they raised a quarter basis point. Now they think they got to raise this quarter basis point. That's going to bring inflation all the way back to zero. I don't think it's going to do a thing. But what I do think it's going to do is going to hurt the banking system. The banking system's in terrible shape right now. It's just terrible shape. And the higher they raise these rates, the worse shape the banking system's in. They're in a lot of trouble. There's still bank runs out there. There are a lot of bank runs. Now, 3 out of the 4 largest bank failures in the history of the United States have happened this year. Now, if we're in such good times, such booming times, such a great economy, a great stock market, why do we got 3 out of 4 of the largest bank failures have already happened this year? And if you throw in the latest one, PacWest, that would be 4 major bank failures this year. That's like 10% of the banks already failing. That's not recession numbers. That's depression numbers. That's a depressionary thing. So the banking system is having a lot of problems. but we're going to keep printing that money, right? We're going to keep printing the money, all we can print. And my opinion is that inflation is going to come back up. Okay, inflation, they say, oh, they just came out with the numbers. We're down under 4% if you take away food, take away energy, and take away anything else that you buy. We can get that number down to 4%. But what's the real rate? It's probably double that. They're telling you 4%. It's probably 8%. Now, who gets hurt with this inflation, right? Who gets hurt? Well, who does it benefit? Who does inflation benefit? It benefits people with assets, right? It benefits the wealthy. It benefits Warren Buffett. He probably gets a lot more money now. Bezos gets a lot more money now. But who does it hurt? Do you realize the bottom 50% of the United States, they don't have assets. They are not have assets that they can invest. They don't have assets that are going up to help counter the punch of the inflation that's hitting them right now. And that inflation's hitting them hard. The bottom 50%, they're getting destroyed with this inflation. But what else is destroying them? They're getting destroyed with higher interest rates. See, when their car breaks down, they go out to buy that used car, right? And then they got a 10% interest rate on that used car. So as interest rate goes up, it's really hurting the poor people, right? So what else are we going to do, the poor people? Now we punched them with inflation. We raised the interest rates on them so they can't go out and get new financing to get a car that runs to get them to work. What else are we going to do to them? Well, Jerome Powell says we're going to take away their jobs. We want jobs to go down. We want to take away the jobs of these poor working class people. That's how we want to hurt them some more. Look at the rich people do not bear the brunt of this. Their assets are going up. They're making tons of money. Look at the stock market. Look at the stock market. It's almost at a record high, right? And the rich are getting richer. They're getting rich hand over fist. But the poor people are getting poorer. What about the elderly, the people on fixed income? Let's talk about that fixed income. All right, let's look at Social Security, right? All right, so they got a little raise last year, went up to 8% or so, maybe, okay. But what's the problem with Social Security? They don't have the money. And if you continue at the pace we're on right now, Social Security is going to have to be cut by 20% minimum in the next 8 or 9 years. And that's not that far out. Look at, I want to get some Social Security before they run out of money. But right now, it's like every 2 people working to support 1 person not working, right? So they're just trying to get these people to work harder, tax them more and more so they can support the Social Security people. All right, well, who else is going to get hurt? What about the pensions? Oh, the pensions, look at pensions. They're underfunded. They're funded about 70%. So they need to get up here to the 100%, but they weren't being able to get funded because the stock market's gone nowhere for 2 years. So they haven't got any increase in their pension accounts, right? All right, so the pensions are underfunded. So if you have a pension that you're dependent on in your retirement, that's going to be cut probably 20%, maybe 40%, maybe 60%. Maybe some of them are going to go completely bust when they go bankrupt. Yeah, that's going to happen. There's a big retirement problem out there, a big crisis in our U.S. right now with retirement. It's not a good thing. It's just not. A lot of people are getting hurt right now. Now, look, I don't mean to be all gloom and doom. There's going to be opportunities out there, but this thing's going to get ugly real quick. Look at the stock market. Could it crash? Oh, it's eventually definitely going to crash. Way overvalued, way in a big bubble. Now, you ask our local analyst, he'll tell you it's not overvalued. My opinion is it's in a huge bubble, right? It's way overvalued. It's everything bubble, right? Everything's in a bubble. Real estate, biggest bubble the history of the world has ever seen. Real estate bubble is starting to pop already. My area, we're down about 10% already, but I think we got another 40% down to go. It's going to get ugly. It's going to get ugly when people have no choice but to sell their house to get some money to live on, right? That's going to be their only choice. There's going to be a lot of them coming onto the marketplace. Ask our local analyst. He'll tell you I'm wrong, and I hope he's right. I want him to be right. I don't want to be right. No, I don't want to be right. I don't want Social Security to be cut 20 to 40%. No, I'm at the age where I'm going to need that thing. I'm going to need some of that Social Security. I don't want that to be cut. I don't want to see house prices go down by 50%. I sell houses. I'm going to need to make some money in my old age, right? Because that Social Security is not going to be there for me. So I want to sell a house. I'd rather house prices double from here. But that's not my take. That's not reality. But if you ask the analyst, he'll tell you we're going up. Ask Dave Ramsey, he'll tell you we're going up. Everybody seems to think we're going up. I don't see it that way. Now, of course, you got to do what you got to do, but I think we're coming down 40 to 50%. How's Mike? You're crazy. You don't know what you're talking about. You're just trying to scare people. You do that fear porn. Look at all your titles. Every title starts with housing crash. Can't you say something positive? I gave you all the positives. I gave you a whole list of them. Now, if you want to believe those, that's great. Get out there. Have a great weekend, everybody. I'm Tall Mike. If you like this stuff, give me a thumbs up. Why not? Why not? It's Friday. Hit the subscribe button so I can talk to you again next week. I'll try not to depress anybody. Bye-bye now.